Hey guys, this is Terry with Futures IO, and it's my pleasure to welcome Anthony Crudele of Futures Radio Show for today's webinar, Process Above All Else. Today's webinar is sponsored by Trading Technologies. During the webinar, please feel free to type your questions into the questions box, and we'll do our best to answer them at the end of the event. If you're watching this on YouTube, please do us a favor and give us a thumbs up if you enjoy the webinar. And as always, please feel free to share, comment, and subscribe to our channel. It really helps us a lot. You can follow us on Facebook, YouTube, and Twitter with @FuturesIO. And without further delay, I'll hand it over to Anthony.
Thank you, Terry. I just need someone to be able to give me the opportunity to show my screen.
One second, I'm doing it now.
How's everybody doing? Hopefully good. I should be able to see all of your questions or anything here in a moment. I always like to ask, as I'm just getting ready to start it. All right, there we go. What's the farthest destination anybody's coming, or actually tuning in? I say coming because sometimes I do live events, but where are you from? Type that in there just so I could see your questions. Idaho. Are you guys still like winter right now out there? Oh, you got Colorado, a lot of the West Coast. Chile, nice. Netherlands, I think that one's that's probably the furthest. Switzerland. Oh, it's a very nice day. That's good to hear. Stockholm, cool. All right. Now, before we get started, first of all, welcome everybody. I want to thank Terry, Mike, Futures IO. Thank you, Trading Technologies, as well. I got to do a quick disclaimer here. Past performance of any trading system or methodology is not necessarily indicative of future results, although we're not going to be really talking about strategy today. Actually, we're going to be talking about something that I think is even more important, process. Quick little bio about myself. Some of you may know me, some of you may not. My name is Anthony Crudele. I am the host of Futures Radio Show, but I've been a member of CME Group since I was the age of 21. I actually started on the trading floors when I was 18 years old. In 1995. I continue to be a member of CME Group this day. I was one of the youngest people to ever become a member of CME Group. Like I said, I went through membership when I was 20 and became a member when I was 21. Started in the S&P pit. Didn't work out so hot for me. I blew my first few accounts actually, and I'm kind of jumping through the first couple of years of my trading. I only traded in the pit for maybe about 6 months. And I was actually in and out of pits for a better part of 5 years. Sometimes I'd go in and out, but I started trading the E-mini S&P right when it was actually just starting. The Globex guys, we used to call them, asked me if I wanted to check out the electronic version of the S&P. I said, sure, why not? I wasn't making money in the pit. Nobody was even really trading with me at the time anyway. I went in there, and then I really became an electronic trader right when the E-mini S&P started and kind of never looked back. I know what it's like to struggle in this business. My brother took my job. As a clerk, was making more than me for several years at the beginning of my career. Had to work nights, check trades in the pits whenever I could. And after I went through $75,000 of my own money, I had to borrow $10,000 from my aunt and basically begged her to do it for me. And fortunately enough, I ended up being able to buy a seat on the exchange. I've had multiple 6- and 7-figure years on the screen. Still have had some losing years thrown in there along the way. And hey, you're trading futures. It's never super easy, but overall, I've been very fortunate, very happy. As a trader, and I love it. And today I'm going to cover some things that, as I said at the beginning, I did a little disclaimer talking about strategy. Well, I've learned that really when my turning point in my career was not by finding the best strategy. I did create my own indicator. I did create my own strategies, and I've evolved them over the years. They're constantly in adaptation because markets are always changing. But what I want to cover in this presentation is it's really geared towards those of you that want to be day traders. And I want to talk about preparation, anticipation, execution. Those are the three those are like the intangibles I think you really need to have as a trader. Forget about what strategy you're trading, because it's pretty much once you have those skills, you could trade anything, I believe. For me, like I said, my strategy is constantly evolved, but the foundation of who I am has never really changed once I've had it really set in stone. And that comes down to my preparation, my anticipation, and really when it all comes down to execution, because I believe the best executor of a strategy will supersede the strategy itself. And the keys to trading multiple markets very simple there for me, and 9 trading instincts we're going to go over at the end for futures traders that I believe really are the foundation of what I do. And it's really those 9 things are something I go over to myself pretty much every morning. And I say instincts instead of trading rules because I believe as a day trader, it's very important to be able to make quick decisions. You don't want to have a set of rules or something that's on a piece of paper that you have to revert to. And so I'm going to go over 9 instincts I believe that you could actually pretty much probably remember just after doing this, or maybe just watching this video one more time, that I think will truly help you. Along the way, as Terry had mentioned, if you have questions, put them in chat. If I don't catch them right away, I will get to them at the end, but this is not, like I said, we're not talking strategy here. This is going to be like a very good conversation. I think that's going to relate to all of you. So along the way, if you do have a question, I don't mind answering it. I start off with this slide in pretty much all of my presentations, and simply because decision making is the #1 most important thing that we do as a trader. I remember reading in a blog one time, and you never know if this stuff is true or not, but you read it and you're kind of like, okay, maybe this is true. I don't know, but either way, it makes sense to me. Someone had said that a day trader makes more decisions than even, the top surgeons in the world. And, going through that process of when they're in surgery. Now, obviously, I'm not comparing what we do to what a doctor does, and by no stretch, but it's really the mental focus it takes. It's the decision making. It's all the thoughts that go through our head. And I start off with this because when I saw this, I was like, look at process, choice, brainstorming, scenarios, action, opportunity, analysis, goals, prioritization, strategy. I'm like, this is really what traders really, this is what it's all about, outcome, so on and so forth. So I always start off with this to say that's ultimately what we're fighting against. Really, we're all fighting against our own demons. I play golf. I didn't start playing golf until I was 32 years old. I wish I started earlier, but I play golf on a regular basis now, and I know that it's really, I have a good swing, but I know that it's really all mental, and I could pay anybody I want to teach me on how to swing the club, but if I don't stay focused for 18 holes, I don't shoot a good score. It's very similar to trading. Prepare fundamentally. So we talked about preparation, anticipation, execution. To me, preparing fundamentally is one of those things where, look, I am not a fundamental, someone who trades off of fundamentals. I trade purely off of technicals. Why would I even mention trading or preparing fundamentally? And here's why I think it's extremely important in this day and age. #1, news has become more of a driver of markets, way more of a driver of markets than 20 years ago. I mean, even more than 5 years ago. And, I look from when I started 20 years ago till now, news hits the wire and it's instant reaction from algorithmic trading, high frequency guys, whatever data comes out, it's moving instantly. So you have to know what's moving the market, what's driving the market. Sometimes it can help you get in. Sometimes that will force you out. Sometimes it will help you make a larger profit, but understand the underlying themes of what's happening in the market. I subscribe to 3 free newsletters that I think that are really good, and I'll explain to you why I subscribe to these 3. Bloomberg Markets, their forward guidance. Every morning it comes in, it's 5 things. If you follow Joel Weisenthal on Twitter, he's the one who sent me this link to go in, and I signed up for it when they just started it. I think it's maybe been a year. It's a very good, I think, letter to follow. It's free. It talks about 5 things. What you learn from this is simply what are the things that they're pushing on the Bloomberg terminal. What are the things that are happening there? So what are the professionals looking at, right? You see Trump, you see this, you see that, right? I mean, obviously, Trump is in there every day, but you basically just look for the bullet points. It takes you just nothing but a few minutes to read it, and then you can read any important article you want. Then I go to the Reuters one, which is the morning news call, also free. I subscribe to Reuters myself, but it's something that I subscribe to, this free newsletter, which I think is very good. It gives me what I look at as not the pure professional, although I do think all the professionals do read this, it's not like the Bloomberg one where if they have the terminal, this is what they're reading. It's the one where everyone kind of looks at it. It's more of the middle of the road. It's the less bias, I think, than Bloomberg, and it gives me a good idea of what the topics are there. And then the CNBC one on the left, which is the one I think that the retail people are mostly going to be reading. So you look to see if there's something that is across the board being talked about. Is everybody talking about the Fed? Obviously, that's Captain Obvious there. If that's a Fed day, then we're going to look to see that that's going to be a driver. But is it a single stock? Is it something to do with earnings? Is it something to do with GDP? Is there something happening in the markets that everyone is looking at that is potentially driving the market. And once again, it's just about understanding and knowing it. So this is a way for me to spend maybe 15 minutes of reading to really get an understanding of what the professionals, the middle of the line, and the retails are all reading. So I know if there's a consistent theme across the board that I pretty much have I'm on the pulse of what's happening on that particular day. And so see what the retail and professional, this is like a recap, see what the retail and professional traders are reading that may be impacting the markets you trade. You don't need to understand the fundamentals, but you do need to be aware of them, right? Like I said, I'm not trading off of any of this, but I want to know what it is. It takes me 15 minutes and I'm pretty much well informed. If I need to spend more time with that, fine, so be it. I do it. Did any of the markets move overnight from these headlines, and were the charts affected? This is extremely important for technical people because when you look at markets, it's not always about the charts, right? I mean, there's obviously so many different ways to skin a cat, and there's so many different ways to trade in the market. And right now, I mean, for many years now, it's really been driven by headlines. It's been driven by a lot of these different things that are happening from the Fed. Right now we're looking at fiscal policy. Before we were looking at monetary policy. Those of you that may not understand that, we're looking at more what the government's going to be doing year over year, taxes, certain things like that. They're going to be really sensitive to the market. We just saw recently what was happening in healthcare. We saw how that was a mover of the market, maybe only temporarily, but ultimately during those times it could affect your P&L. Are they confirming your technical analysis or contradicting it? And this is a huge thing for me, and this has helped me a lot. And how this has helped me is because what I learned as a trader is that I've always admitted that I really know nothing. And what my strategy is telling me to do is based upon a strict set of guidelines in managing risk, and the market may go that way and it may not. And over my career, I've probably been a 50-50 winner versus loser. I've never really been better than that. And ultimately, I've had some really good success because I've been able to hold the winners or make more out of the winners by trading bigger and to cover my losses quicker. Or to trade them smaller because of understanding what was happening in themes. And this is a big thing because once you understand that, so like if right now, all of a sudden, I believe that the Fed is going to continue to raise rates quicker. I'm going to now potentially be looking at my technicals on my treasury markets or my bond market, and I will be looking if they're getting negative. I will be more aggressive on the short side because if bonds go down, rates are going up. Same with treasuries. And if we believe the Fed is imminently raising rates or raising rates quicker or more, then I'll be more aggressive with that. So understanding the headlines, if things are getting better in the economy, doesn't always interact that well with the market. We know that if you traded S&P, you know that just because the economy is doing good doesn't mean the market will. But if there are some underlying things happening and I'm getting long, it's an easy example to give, then maybe that I'll trade it more aggressive on my longs versus my shorts just by understanding a theme in the market. So preparing technically, I mean, this is obvious. This is the Captain Obvious, another one, right, where you come in and you prepare technically. But I want to talk about this. I put my indicator up here on charts to give you an idea of what I look at. And when you look at this, you say, okay, well, I just see support and resistance lines. I see a few moving averages over here and whatever. That's all I look at. I keep it so simple. It's unbelievable. I look at support and resistance. I look to see where the market's reacting. At those support and resistance lines, I look at some daily moving averages to see where is the market trending. If you notice lately, the market will either trend one-dimensionally up or one-dimensionally down in a lot of markets. It happens quite often. So I look at moving averages just to see the trend players, the trend followers have been having much more success lately. So even though I'm not one of those types of traders, although I do like to trade with trend, I trade more aggressively when I'm with trend on my short-term strategy. So for example, this is S&P. I look at a weekly, I look at a daily, I look at a 60-minute, and I look at a 5-minute. I look to see if there's any levels that are near each other. In this particular picture, there are none. But when you look at it, I look to see if there's any, what we'll call confluence between levels, between different time frames. Where are we on the daily moving averages? Right now, the market's been moving higher, right? We know that. And we've been holding above, right now, this is a little bit of an older chart, but holding above the 10-day or the 20-day moving averages. What I'll do is when we coincide with those moving averages, I simply look at my strategy and say I will trade more aggressively on the long side because trend is up. If the trend were to be down, I would be trading more aggressively to the downside. Pretty simple, huh? But it's a lot. It's one of those easy things that has really helped me make more money. And it's really because I look at the basics and say, okay, trend is up. I'm going to be more aggressive on buying dips. Trend is down. I'm going to be more aggressive on selling rallies. Or trend is up. I'm going to be less aggressive with shorting. And those are just the simple things. So preparation is a huge part of what I do, and it's a very basic. These are things that doesn't matter what strategy you're trading. It just matters that you come in Start with your longer term charts for your bias. Use the same indicators on every chart. If I went across this whole room right now of all the people that are in here and I wanted to get the temperature of every single person, I would use a thermometer, correct? So no matter how big you are, if you're a man, if you're a woman, it does not matter. I would go across each and every person and I would use a thermometer to take their temperature. Why would you do anything different on your different time frame charts? I'm a big believer of this. I picked 3 indicators in that chart. You couldn't see all of them, but basically I use moving averages, my indicator, and I use divergence. So actually technically 4 because I use divergence on MACD and stochastic, and it's built in and it'll show dots or something to trigger showing its divergence. That's all I've used. And I feel so much more comfortable because I've been able to master the simple trades that I know work, and I've been able to trade more aggressively with the direction of the trend. So I just basically look at to see if we're holding above short-term moving averages or below them, and I'll trade accordingly. Do not search different types of charts for trades. This is a big problem I had. At least it didn't work for me. Pick a chart to execute on and use that chart consistently. I only execute off of 60-minute charts. I may look at other charts for preparation, but I only execute off of 60-minute. That's my bias, period, the end. So if it's how it's responding to a level there is where I take my trades from, because that's the time frame I like the most. You've got to pick one too. Don't be the guy or girl who looks at a fib on a 15-minute and then on a 5-minute you're looking at a trend line and then you're looking at something on a 1-minute and then you're like, here's on the daily, and then there's no consistency there. Consistency, everybody when they start to lose money only wants to be consistent, but you have to be consistent with your process. That's what's more important than really any technicals or fundamentals you're looking at. Be consistent with what you're looking at. Learn from other traders, but choose a style that fits your personality. No 2 traders are the same. That's just reality. I mean, I have worked with many traders over the years, and I could tell you this. They've sat down with me. I've worked with them. I've helped them understand certain parts of the market, and I will tell you this, that nobody is going to be exactly like Anthony Crudele, like myself. Nobody is. Some people will be very similar in what you're doing, but they're never going to be exact. And ultimately, I've learned that you have to just take what you're learning from people and build your own strategies. Or you could use somebody else's strategy, but you might execute it a little different. Another thing I mentioned, just to recap, trading with the trend, I trade bigger and more aggressively near my prices. When I trade against the trend, I trade smaller and less aggressively with my pricing. So a little example I want to show you, and I'm going to draw it in here. It's a basics example. So if the trend is up, okay, and the market's trading on the trend, okay, typically what I'll do, if I'm looking to be long, I will buy at or above, let's just say we're using a trend line for our entry. I will buy at and above prices more aggressively. Because, why? Because the trend is up. I may not be able to get to the trend line. Most of you probably find this as well. You find out that you don't get to get filled when you're going with the trend, which is why anytime if I had a price to buy, let's just say I wanted to buy 2150s in the S&P. Right? Typically, I'll start, if I think the trend is up and I believe in that and my homework tells me that, I'll start buying above it at 51 or even 52 because I know that there might not be an opportunity to buy at 2150. So I'll trade smaller at an above trend because I think trend will be going up. And the flip side is if trend is up and I'm looking to short, then I'm going to look to try and sell after tops are made. So I'll sell in these points, okay? And I'll sell smaller and less aggressively. I'll wait for things to develop. And I know that I'm probably going to make less money on them because I feel like there's going to be less opportunity shorting against the trend. Simple, but effective. Anticipate. Tom Brady, everyone knows who he is. If you don't, obviously we have a lot of people from Europe in here, as I went over at the beginning, where people are from all different parts of the world in here today. Take your favorite football player, and I'm talking soccer now for U.S. people, and just look at what they do. Their anticipation skills are the best. That's the difference. Their anticipation skills are the best. And for U.S., it's quarterbacks. We look at that. They know they could scan the field and how they're going to anticipate. They could shake off defenses. They can do that. Their anticipation, they stop everything, slows down. Tom Brady could probably sit back at this moment while everybody else is running and doing something. To him, it probably looks just like this picture, almost at pause. And it's because he knows exactly what he's looking for. Not a mystery there. He knows what he's looking for, so that's why he can anticipate well. This is why I talk about preparation so important, because once you prepare, now you can anticipate better. Know what you're looking for and why you are looking for it. I talked about it at the beginning. How do you trade multiple markets? Like I said, this is a very simple answer, right? How do you trade multiple markets? How do you anticipate it? Know what you're looking for and why you're looking for it. I traded S&P probably only for the better part of 10 years. And then now I'm in this is my 18th year of trading, 20 years in the business. And I could tell you that the last 6 or 7, if I didn't trade other markets, I wouldn't have had that many of great years, because sometimes the S&P is really busy, sometimes it's really slow, and I have not been as effective trading it only that market. There's been years like this year where I've been trading treasuries much better, and it's been much better for me as a trader to be able to have multiple markets. How did I branch out? I did that because I was able to know exactly what I was looking for and wait for those exact moments. This is where preparation leads to patience, leads to good anticipation, and then you execute when they get there. I've actually found that I trade multiple markets better now than I actually traded one, because I'm now waiting for one market, for each market to show me something that I'm trading. I'm waiting for that setup, and if it doesn't come, I don't trade it. So I've been a much more disciplined trader because of it. React to the market, don't be reactive. Watch how markets react to prices. Don't react before they get to prices. What do I mean by this? If I have a price and the market gets to it, and let's just say the trend has been kind of neutral, it's been choppy, it's intraday trading, I look at it and go, how does it react? Does it hit my level and respond? And then my overnight levels, or in the overnight session, was it hitting this level? Was it responding? Is there a good response? Did it just hit it and blow through it? Does it keep trading around it? Every strategy works sometimes. That's just the truth. I could show you any strategy and make it seem like it works. The difference is that when you anticipate, you wait for levels to get tested. Don't be in a hurry to be in. You don't have to be first in. When you're first in, typically means you're first out. And a lot of times you're not going to make as much money because you're first in or first out. I know, at least in my experience, usually when I'm first in, meaning like I get it right when the price trades, it goes my way a little bit, I can't wait to take some off. But if I wait, and I know the high or low is made, and I see the way it's reacted to prices, I get in as the move is happening, I tend to have a better trade on. So react to the market, don't be reactive. Anticipate when they're near your levels. Don't impose your thoughts on the market when it's near your levels. Don't try to force it to work. Now, these are basic things, but these are things that I even need to be reminded myself. I've been doing this a long time, right? Just because you're watching does not mean you are not trading. If somebody calls you and you're at your machine and you don't have any positions on, do you say you're trading? Yeah. So understand that. I had to learn that the hard way, because for me, I was just a chart junkie, spent I don't even know how many hours a day. I mean, I had a 13-inch monitor on a gateway computer in the mid-1990s looking at charts, and my parents were like, what is wrong with this kid? He's on this thing 24 hours a day. Prior to that, I didn't even have a computer, because really nobody did, and I got it just to look at charts. And the bottom line is that I learned that once I did my homework, I would sit back, and now I've learned to relax, wait for things to happen. And majority of trading is waiting and watching, so you learn to be a lot more patient as you go through this business. Execution, it all comes down to this. This is really what separates someone who's successful versus someone who doesn't have success. It's all about execution. I could tell every person in here at the same level to trade in the S&P. And whatever, you might have 200 different ways of trading it. 200 people, 200 different ways, whatever it is. When it comes down to it, you have to have that preparation and anticipation in order to execute efficiently. And for me, I was an overtrader. I traded every level, I traded every price. It got there, I did it. And I'd get in, I get out, get in, get out, and I try to consistently and basically overtrade every level. And what I've learned is that when you go through your preparation and your anticipation, that's how your execution gets good. That's how it gets really good, is that I know what I'm looking for. I know I'm going to wait to react. I understand what's happening in the themes of the market. I understand the technicals. I know exactly what I'm looking for. So when it gets there, you now have a consistent process of execution. There's no way to really backtest yourself if you're not doing something consistently. There's no way to look back and to see how good you've been doing if you are not doing the same things every day. So when you really look at yourself and evaluate it, everybody's evaluated by how much they've made or lost. I understand that. But you can never really evaluate yourself and get better if you aren't doing something consistently and looking at the same things consistently, right? All strategies work sometimes, but the best executor of that strategy will always outperform the strategy itself. I'm a firm believer in that. And if you don't believe that, then you should just automate your strategy. What are you sitting here talking to me for? Because at the end of the day, this business is now allowed us to be able to automate strategies. So if you think your strategy is so good, do that. I really think that you should. But if you want to be someone who point and clicks and you want to go out there and you want to trade and you want to do that and you want to actively, manage your strategy, then you have to execute it. And you have to know when to trade big, you have to know when to trade small, and you have to know when not to trade. This is extremely important in the trading business. And those who understand big, small, not at all, to me, this was the turning point in my career. Understanding the preparation, anticipation, and then getting to this point. I know to trade this bigger now, I know to trade this smaller now, and I know not to trade this level at all. When you get to that point, then you really are an executor of your strategy. Invest your time before you invest your capital. So what I'm going to have you do is watch the next 9 instincts that I'm going to go over, and I want you to invest your time before you invest your capital next. And I think understanding these 9 instincts is really going to help you, because it really helped me, right? There's no guarantee it will, but I can tell you this, that for my own benefit, when I narrowed these things down, I didn't just make up 6-minute abs. It's like I created, 9 trading instincts just because I felt these were the 9 I needed. And this was well before even, people were even doing PowerPoints. I was writing them on my trading card. And let's go through those right now. So 9 trading instincts that I am actually very passionate about, that really I think about on a day-to-day basis. And we got some funny pictures in there, right? Instinct number 1, ask yourself this question: how much am I willing to risk per day and per trade? If you don't know the answer to that, then really what are you even doing? And you got the picture of Homer Simpson in there, the guy who you see on Twitter who acts like he's swinging futures or stocks and he's just winning all the time, and you want to be like that person. Well, let's face it, it's not reality, and then that person probably isn't probably entirely telling the truth either. But if you look at it, be who you are, understand who you are. When you do that, it really does make things a lot easier. And I always say, trade a strategy that fits your personality. Don't, because somebody is successful making money doing something, mean that you have to do that to be successful too. It may not fit your style. I like to intraday trade. I like to swing trade. I've been doing some options now. That's what fits my lifestyle right now. 5, 6, 7 years ago, and going back even to 20 years ago almost, I was a scalper. And I only like to make a couple of ticks, and the way I made more money was by trading bigger. I don't do that anymore because actually I feel it's too hard to compete at that level now. And so I know I've had to change what fits my personality, at this stage of my life, and what I also enjoy to do. So you can always change. Do what fits yourself. Learn from others, but be yourself. Trade according to risk. This is probably the one, I get this question a lot, and if anybody has a question about this after I explain it, go ahead and fire away. But once your strategy gives you an entry, a stop, and a target, execute according to the risk, the risk price, the stop. What do I mean by this? If somebody says to you, or your strategy says, buy 2150s in S&P, okay, stop. I'm just going to make this very basic. 2140, your long, targets 2160. Okay, that's it. You're risking 10 for 10. Very simple. Everyone can understand this. I really don't care what my strategy says now, 2150. It means nothing to me. 2140 is all that matters. Because a couple of things. Number 1, is there something going on that day? Is Amazon and Apple weak? Is the energy and the financials leading to the downside? We're trading 2152. I know trend is up. Maybe those stocks are a little bit weaker and they're pushing us down. I see that happening on the tape. Maybe I want to buy below 2150. So maybe I'll trade a little bit bigger, right? I don't have to necessarily buy at my entry. I have to buy according to my risk price. I know I'm wrong at 2140. That's all that matters to me. I don't buy at the entry unless the entry is like, okay, there's nothing really telling me not to buy there, I'll do it. But I will use my execution skills and I will buy below the entry, because today there might be some slippage to the downside for reasons. I'm going to buy below it. Okay, today everything is up. Advanced declines are up. Financials are at the top of the board. They're leading the S&P higher. I might want to start buying them above 2150. Then maybe I'll trade smaller, but I'm still ultimately going to trade according to my risk price. If I'm going to risk $1,000, right? Or let's just make it 2,000 because it's the 10-point stop. Let's just say that that's what you were going to risk. Well, that would be a 4 lot at 2150, right? But at 2152, maybe that's only a 3 lot. But maybe at 2145, right? Maybe that could be a 6 to an 8 lot or even more, just depending on what you're doing in there. So now you can trade, your position sizing can increase closer to your stop or decrease further from it, but you could still participate in it. A very important part of trading. Because too many people are hell-bent by entries. Give me the best entries. Entries, to me, do not matter as much because I trade in a range of execution according to my risk. Always be a student. Easy thing, right? Watching while you are not trading is learning. I come in every day and allow myself to learn from the market. You all, if you haven't learned this lesson yet, I almost said y'all. It's pretty funny from me being from Chicago and now I'm living in Florida. If I start doing y'alls, that's a problem. But anyway, if you are not willing to learn every day, then really this business isn't for you. I mean, just to tell you the truth, I mean, at the end of the day, it is only about adapting in this business, and you can find your edges, and ultimately they may change, and you have to be able to adapt to them. That's just the simplicity of it. So if you come in every day, allowing yourself to learn from the market and allowing yourself to learn something, then over time you build a book of education that ultimately makes you a better trader. And every day I come in and say, what I've known in the past does not mean anything is going to happen and going forward, but I'm going to do my best to adapt to what today is, to see what's happening. And when you allow yourself that, it takes a lot of pressure off you. So I remind myself this a lot. I'm always a student of the market. Never will I not be. React with reason. Just because it's slow or busy, that does not mean you have to make a trade. This is probably the hardest thing for me. And I wrote this down. I said react with reason. It's probably one of the first rules I wrote. I don't remember exactly what order these came in, my instincts, but react with reason. And it's one of those things where we all know that that's what we should be doing, but we all don't necessarily do it. So once again, this is an instinct. When something's about to happen, I'll give you an example, flash crash, right? Everyone talks about that, how that particular day, that's what everyone's tagged it as. You know, the market just started breaking. It's like if you just suddenly bought because you thought the S&P was oversold until it went limit down, that's when it was finally done. Look at the election. Look at Brexit. Have we learned nothing? You know, just look at those times. If you're doing something without reason, you can really get blown up. And I have been in situations where I put myself really, I'm not going to lie, my worst trades have come from times where I was trying to pick bottoms or tops just because. And I think this is a very good instinct to have. You know, and save your mental capital and potential real capital for when it makes sense to put risk on a trade. Simple, but once again, very effective in the scheme of things. When you are making money and your strategy is paying you, keep trading and or increase your risk per trade. Not an easy thing to do. When did I start to figure this out? Well, I got tired of making the same amount all the time, and I just said to myself, you know what? If I don't start believing in myself, I have to know when to be aggressive, when to trade big, when to trade small, when not to trade. When I was up money, I would continue to trade. When I was hot making money, I would trade. When I started losing, I started trading smaller and less, and I'd take days off. And it helped me. And you had to learn when to be aggressive in this business, because I believe that this business is about moments. Some of you might look at it and say, I want to make $1,000 a day, or I want to make $500 a day, or whatever. I want to make $100 a day. It doesn't matter what it is. And you might look at that and you're going to scale it out in a week. You're going to scale that out in a month. And then you're going to look at the year. You're going to say, I'm going to make $1,000 a day. It's going to be roughly $20,000 a month, right? If I can do that, I can make roughly $240,000, $50,000 a year. I'll be happy as, you know, guy, you know, right? Some of you that's more, some of you that's less, whatever. Do the math. You understand it. Never in a year did I look back and make the same money every week and every month. And I guarantee that's the same for you. Never. I mean, not once. 18th year starting, it's never happened. Why? Because this business is about moments. This business is about seizing the moment when the moment presents itself. It's about when you finally see something on your strategy that is so juicy, you can't turn away from it. What I do is I start to risk more, because those are the moments that make my week, my month, my year, sometimes my career. And that has been the case for me for a long time. It's why I don't get overly anxious on any particular day. When my strategy is all of a sudden giving me something that I really like, then I try and I take it down. Be the lion, be the wolf. Get out of losers. Easiest rule, hardest to apply. It's why I work stops, or, you know, depends on how long my time frame is. I don't always work them, but for day trades, depending on what I'm looking to gain out of the trade, I always know where it is, and sometimes I'll keep a mental stop, and I will hold myself accountable to it. You know, there's just, you know, if I'm trying to make 3 points in the S&P and I'll put a stop in potentially in that moment, because I'm not going to, you know, let myself all of a sudden lose 5, 6 handles on one little thing that if I'm trying to make 25 or 30 points in the S&P or something bigger in gold or something like that, then maybe I won't work a stop because it's such a wide area. It's very unlikely it'll get hit that day, or I'm looking at an hourly or daily close. But once again, I have a mental stop, also a capital stop as well that I abide by. Losing is a part of the business. Once your stop is determined, you trade off of it and get out of it when it's hit, period. Very simple instinct, also hard to apply. Instinct number 7. This is one that people a lot of times will question me on. And as a day trader, as I said at the beginning, this is geared towards day traders. I have different positions to where I don't apply this instinct, but on a day trading basis, once the market gives me equal risk versus reward, I take half of that position off. Why do I do that? Because I always take the risk out of the trade. And it always gives me the ability to hold a smaller position for a longer period of time. I have learned that I can make more out of a smaller position by holding it for the furthest target versus trading bigger, covering everything at the first target, or so on and so forth. Meaning that, here's a good example, 10 S&Ps, you want to buy it at 2150, go back to that same example. I'm risking 2140s, but the target maybe this time is 2170. It goes to 2160. I take half off the table. My risk is now basically zero if it were to run all the way down to my stop at 2140 because I've now taken half the position off, which means I've bettered my pricing. So sometimes I'll need to take up that position off to think clearly, to see the market, to understand what's really happening. And usually when I'm in a full position, obviously that would mean I'm trading too big. Sometimes that is the case. But a lot of times, that's the trade that I'm willing to risk, but I just get smaller to be able to hold that, especially when I'm doing day, or like medium-term swing positions. Longer-term positions, I basically put a position on that I wouldn't do that. I have a target and I let it go because I'm trading small enough to where that position is much more a stronger hand in the market. I'm talking more on the day trading side. This rule will apply to this instinct. Know when to stop. This was a hard one for me. These are all hard for me. But if you're sick, tired, frustrated, something's on your mind, something's happening. Right now I have a older dog. He's not doing the greatest. I was thinking about him. Today we came in. I had a look in the 30-year. After that, I kind of laid off, did other things in my office and in my life, and I just know that I'm not 100% focused. And walk away till you regain your focus. Once again, this business is about moments. This business is about taking advantage of moments and not getting taken advantage of when you are in weaker mental moments. If you just can think about this moment, think about something that's happening and you know that you are not focused, and you remind yourself of this instinct every day, and you walk away, these little things that we're talking about have truly helped me grow as a trader, helped me become a better trader. And I still work on them to this day. And I wrote these probably 15 years ago. And be disciplined. This is a rule that everyone seems to have, and they all think that they know that what it means. It just means stay disciplined to the strategy. And that's what most people think it is. Yeah, and that's true, but more importantly, it means to follow your process. I started this day by talking about process. It begins with morning and evening preparation, followed by anticipation of trade setups, and then execution of the trades. This is what being disciplined means. It doesn't matter if I start trading at 1 in the afternoon or 1 in the morning. Before I do it, I am prepared. I know exactly what I'm looking for, and I know exactly what I'm anticipating, and I'm ready to execute the same way across the board. So this way, I can mark myself against I can see where my progress is, right? I use my indicators, my strategies, and those are the things that I use. What do you use? Stay disciplined to what you do. Too many people complicate this business. Trading is not complicated. People are complicated. Now, you learn those 9 trading rules. I call them instincts, but learning the rules is one thing, and applying them to your trading is what's really, really important. Hopefully today I was able to share with you some things that you could start applying immediately into your trading. This was once said to me, and it's one of my most favorite quotes: don't confuse effort with results. That's because nothing is more useless to a trader than knowledge that they do not use. So that does it for my presentation today. Once again, everybody, I do host a podcast where I'm on twice a week talking about types of things like this. That is actually also sponsored by Trading Technologies and CME Group that I'd love for you to check out. It's free. We don't sell anything on there. Nothing sold in the podcasts. It's free for traders. We hope to make the community better by doing this show. And I feel very fortunate to have such great sponsors and great listeners supporting us. FuturesRadioshow.com. You can also check it out on iTunes. Also, me on Twitter, @Anthony Crudele. I'd love to hear from you. I see some questions out there. And Yeah, so feel free to fire away whatever questions you have. I think I hear Terry about to jump back on if you are, Terry.
Yeah, I'll read the questions out to you so that way they're in the video for people watching
Okay.
later. Do you scale out when you're scalping or day trading?
These days, I am not really scalping. I mean, the only time I would even scalp is if it was really busy, like a Brexit type scenario or something like that. I always scale in and scale out of even medium-term positions. And the reason I scale in and scale out is because I trade in a range of execution. Typically, what I will look to do is, one of my things is I'll do a third, a third, a third, or I'll do 50-50, depending on what was happening. As I talked about at the beginning, if the trend is up and I'm getting long and I feel like I'm very bullish no matter what market it is, I will start with a smaller position above my price of entry, what my strategy is telling me, and then I'll probably work some at entry. If I'm bullish and the market is a little bit weak that day because of reasons, I will work at entry, maybe to start in the position, and then I will look to scale a little bit below my price to hopefully get a better price. And if I don't get a better price, oh well, at least I'm in, and maybe I'll make something on it.
Okay. How does one recognize a moment to be aggressive in real life?
Well, that's a great question, but it really comes back to preparation. I mean, unless it's something that's completely shocked the market or changed the market, something happens, from, President Trump saying something, or even something like gun lack or something like that, somebody will come out and say, oh, this is what's happening in the market, and all of a sudden the market moves. That's obviously a scenario where I'll be aggressive based upon what the headline is, but prior to that, it all comes down to me, the simple things. And, by one of the benefits of me doing Futures Radio Show, I've had the ability to talk with a lot of traders, and a lot of traders have different ideas. And one of the ideas that I've spoken with a lot of traders on, from Jerry Parker to Larry Tentarelli to, gosh, there's so many more I could think of right now, but those are the two that come to mind that are trend followers. And they really believe, and, I go back to Larry, and he had said to me that, he just uses the 200-day moving average, and you look at it and you see that some traders having success just trading off of that. So what I do is I look at daily moving averages to see what trend is, and if trend is up, I feel like I am going to be more aggressive on that side of trend. So typically I'll look at 50, 100, and 200-day moving averages to see if they're above them or below them, and I will be more aggressive. Let me give you an example. So how would I know when to be aggressive with that? So here's the perfect example for this. So lately we've had I'll give you two examples. The S&P has had been above its 50-day moving average for some time, and when the S&P recently broke, we had a level at 23.25, and the 50-day moving average was right around there. Once that got down there, we were looking more aggressively on the long side, simply because the trend is up. So when we get near those moving averages, and it's also near support, real time, it's like I already know going into that day, anything around that range, it could be a 10-point range, anything that I'll get in my short-term strategy, I will be aggressive. Another example is the dollar recently went down, and if you go back and look at the dollar chart, I believe it was probably like November was the last time it was near its 200-day moving average. The same low was made. It got close to its 200-day moving average. It had divergence. It went down there just recently, got near it, didn't quite test it, and started to push up. I felt at that moment, I'm like, they are protecting it again. Let's look for, if we're looking at the dollar, maybe we're not trading it, but maybe we're going to be aggressive short euro, maybe aggressive long dollar, or maybe something that's counter against the dollar could start to rotate down. So I look at those types of things to know that it's imminent. So as they get near those tests, that's when I know to be aggressive.
Okay. Do you fade the market, or are you always trading with the trend?
Oh, yeah, I absolutely. Well, I'll fade. Technically, I trade a strategy. So my strategy will give signals on both sides of the market based upon 60 minutes, and they don't change every day. So might change in multiple days. It might take a week. Who knows how long? And there's really, time isn't a factor. It's just really depending on price. So if I get a short in S&P right now, I look to see if I'm getting shorts across the board. Absolutely. I will look at that. Like right now, we have a weekly level in S&P at 2370. We have our weekly level is 2348, and we have a daily level at 2370. So I know that daily closes below 2370 in S&P continue to make me feel like I could be short. I know that we're above trend, and we just hit the 50-day moving average, but I am not scared to go against trend here because my strategy has got multiple levels in the mid 23, let's say 50 to 2370 area. So on my 60 minutes giving levels that is generating short, I am not scared to take those because I'm getting multiple confirmations. I like to get multiple confirmations going against trend because that gives me the confidence to do it. You know, if I'm going against trend and just maybe my 5-minute chart has got a level to be short or something like that, I might not do it because it's just that level. I would like to have more confirmation going against trend.
Okay. So I'm going to, do you also trade in trading ranges?
Everything I do is within ranges. So whatever my price is, it's a range. It's based upon the stop price. So if the stop comes in, let's just say, I'll go back to the example I used today, 2140 in S&P. If I think I need to, my strategy is saying 2150 entry, it'll show me an entry. It'll say this is the price because, you know, I'm basically building the strategy to give me entries. But it also gives me exits, gives me 2 targets, and it gives me a stop. So what I do is I look for what the stop is, and then I will trade accordingly on that particular day of what's happening. So right now, we're kind of in limbo here. I think in S&P, for what I have on the buy side, we have some resistance. So if I'm looking to be long, I'm actually going to be a little bit more patient, and I'm going to trade in a range below my entry price because I'm fighting some weekly and daily stuff. But yes, I always trade in ranges. I don't believe in one price, which is why I believe that a one-lot trader is actually more challenging to trade than a 2 or a 3-lot trader, because you're hell-bent by one price. I find that to be a tougher road.
Okay. What do you think the direction of day trading is heading? Do you see people manually trading in the future? With the ability to program your own strategy, do you believe that there will be a day when manual trading comes to an end?
Do I believe that there will be a day that manual trading comes to an end? I would say no. I don't believe that that day ever happens, because I do believe that point and click will always have a place. I don't believe that it will ever completely end. And with all of the HFT and algorithmic talk, a lot of where I think the day trading world is headed right now is to artificial intelligence, AI. So you asked, where do I think it's headed? I think it's heading into that. I think we're moving away from HFT and algo not to be as prominent as it was, and I think they're chewing each other up. I think that the speed war is kind of won by the top tier people, and I think they are always going to have their place and do what they do. I don't see it going away. I just don't see it as an area of the market that's people are going to continue to try and grow and compete in. Because I think once you figure out the speed race, they've kind of, the top people I think have figured that out. I think where it grows now is, on the side of artificial intelligence. A lot of what I'm working on, a lot of the people that I talk to are feeling the same way as I do, is that AI is where it's headed. I believe that, being able for a strategy to think and to be able to execute based upon reactive levels and things like that, it's going to be a much more efficient and a way to where I think that the industry is headed. So that's where I think it's headed. And at any point, I do not think day trading will ever end on the manual side. I just think it'll probably be less and less. And maybe it gets to a point where it just kind of sits there for a while, and then maybe it grows a little bit and then comes back. But I just don't see it completely ever going away.
Okay. There was a comment in the question that I didn't read, but it talked about algorithms or the emotions being stripped away. And I think there's kind of a this misidea, if you automate a strategy, that it takes the emotion away. When any strategy trades, there's drawdowns. And so even if it's running automatically, you still have to have the I'm trying to think of the word. You still have to have the ability to live through the drawdown of this strategy trading, because people automate strategies all the time. They turn them on and off because they get scared or they think it's not working. So I think thinking that you can go automatic or automated and get away from emotion is a false notion or a misconception.
Well, once again, I mean, for me, I have done some automation. I can tell you that there was no easy feeling about doing it. Number one, especially from my background, as I am someone who has always been a point-and-click trader, so when I take it out of my hands, it's always been very difficult, and I see something happen, and I'm like, oh, geez, I don't know if I would take this one. So I think that depending on where you come from, I think is really what determines that, because I have talked to younger people or people that are new in the trading world that have only done automation, that basically turn on automation and walk away from it. So I think it's such depends on who you are, where you come from. I think that's where that would be. I mean, yeah, I would agree that, taking the emotion out of it just because you're running an automated system. Well, who do you think will oversee those automation systems? I mean, you may not be intervening, but to say that they're not feeling, the stomach churning when all of a sudden, your oil's ripping down and all of a sudden, your strategy is long oil and the thing just keeps ripping in your face. I mean, it's not easy to deal with.
Yeah.
It's one of those things where, but if that's what you're doing and that's the stop and that's the risk, I mean, you tend to get a little bit, it becomes a little bit easier to deal with. I've learned that for me, I go into every trade, and I know it might sound crazy, is almost expecting that it is probably going to be a loss, because I go into it not as a negative thinker, but I look at it and go, if I get stopped, I've already accepted the loss, so I should look at it and say that it's not in any sense in the negative term. It's just that I go into it thinking that if this trade gets hit, I'm already healing from it. So it's imagine like going into a trade saying you're going to risk $500. Well, I basically at that moment feel like I've already lost $500. I've already invested the $500 into this. Whether I get a return out of it or not, that's the question. So when people say, how do you tend to eventually take emotion out of it, you never really do, because immediately upon that, when I spend the 500 or the 1,000 or whatever it is on that trade, yeah, you're like, wow, I just invested that money. Trade is an investment, and it might be gone. So I look at it and go, well, it probably is gone. I don't know, but if it goes my way, then I'm going to try and hold it. And
Yeah.
so that's something that I've done to just basically psychologically convince myself of that. It's helped.
I think I agree. And when I first started trading, that was, I was always told, whatever money you're going to trade with, you might as well be able to just light it on a fire on your desk, because as soon as you fund your account, that's essentially what you're doing. That money is gone. And I think on a smaller level, trade to trade, if you have that same mentality that it doesn't matter where that trade is going to win or lose, I think that helps a lot. It's all about, again, like you said, the process. My strategy says this is what I need to do. This is the process. I should fire now. I always equated trading as like financial science. I create a hypothesis, and I am a hypothesis. I am putting a trade on. It's going to test it. Whether it wins or loses, it doesn't matter. It's just science. I'm just testing different ideas with little bits of capital and see which ones work. So,
yep.
There's a question: do you trade currency futures? And I'm going to kind of open it up, I guess, into like what markets do you trade?
Primarily, I trade S&P, and I trade Treasury bond market. So I'll trade 5-year, 10-year, 30-year. Trade S&P. I will touch the crude and gold every so often. Not very often though. They have to be like the perfect setups, like the stars align. Otherwise, I don't really trade them. And I do, like I said, I will probably trade a little bit of Dow and maybe NASDAQ every now and then, but typically if I'm trading into the U.S. equities, I'm trading S&P, but sometimes I'll get a setup on the Dow or the NASDAQ that might make more sense for me, so I'll do it, but those are rare occurrences. But these days, primarily, I would say I trade 5-year, 10-year, 30-year because there's reasons for that, and it's because the volatility there, the rotation there, the uncertainty there, I think is better for day traders, better for what I'm looking at. Sentiment shifting a lot from what the Fed's policy is going to be, what fiscal policy will be, and I think that there's more opportunities there. They're very liquid markets, and they are markets that I believe create a good bit of opportunity because of the uncertainty and because of the sentiment shifts.
Okay. All right, if there's no other questions, we're close to an hour, so I'm going to go ahead and close the webinar here. Thank you for the awesome presentation and information today, and most importantly, thank you for your time.
Well, thank you very much, Terry, Mike, Futures.io, Trading Technologies, and all of you taking time out of your schedules to join me here today. I truly do appreciate it, and I really hope you'll check out FuturesRadioshow.com, check out our podcast, follow me on Twitter at Anthony Crudele. Like I said, send me a message anytime or an email on our website. I'd be happy to hear from you. Thank you, guys.
Thank you.